All right, I'll go ahead and get started. Hello, everyone. My name is Kyle Kubler. I work for the University of Northern Iowa, more specifically at the John Papa John Entrepreneurial Center there at UNI. I'm back again. If you were at the last one, you would have recognized my face. If not, if this is the first time seeing me, it's probably because normally I work behind the scenes and helping out Patrick for these presentations, these webinars. But today he had to step out and ask me to fill in, so here I am. Anyway, we are going to do a really great presentation for you today, talking about any tax laws, legislative updates with Claire Wolfson here. And we just wanted to say thank you for, stepping in and sharing this great information with us. Just to start out, I'd like to share a little bit of information about Iowa SourceLink and what we do. Iowa SourceLink is a website provided to Iowa entrepreneurs and small business owners who are looking to start, grow, innovate, exit their business, whatever stage they may be. We try to be the one-stop shop where Iowa begins, starts, grows, innovates across the state of Iowa. On our website, we have a ton of great resources, including tax webinars that we do with the Department of Revenue for you to check out. So if you wanted to check it out, you can go to www.iasourcelink.com. So today we are going to have this presentation, and I wanted to run you through a few housekeeping items before we really dive into the nitty-gritty things. To start, there is a question and answer box down at the very bottom of your screen. Feel free to add in any questions that you may have. Claire will try and answer those throughout the presentation. If we don't get to everything during the middle of it, at the very end, we'll try and go through everything. There may be some stuff that she cannot answer. We'll go through that as well as we go through the presentation. But then you should have an answer towards the end. Also, another reminder that this will be recorded and available on our YouTube channel. If you just look up iasourcelink.com or Iowa SourceLink on YouTube, you should be able to find it. And then as well, if you go to our website in a couple of days, the link should be posted there as well. And then shortly, there should also be a copy of this slide deck being sent in the chat for you to download and keep for your records if you like and review. And with that, I think I'm basically done. Hopefully I didn't mess up too much stuff, but I will hand it off to Claire to talk with y'all.
Thank you, Kyle, for that introduction. And thank you, everybody, for joining us this afternoon and giving me the opportunity to present to you all. Since I'm going to be talking to you for an hour about changes, I wanted to introduce myself quickly. My name is Claire Wolfson, like Kyle said. I'm the Legislative Liaison and Administrative Rules Coordinator for the department. Legislative Liaison, for those of you who don't know, is essentially government speak for lobbyists. So I am responsible during session for passing the department's bills and monitoring bills that involve tax changes, which why I am here to talk to you all today about the 2021 tax bills. And on the off time, when those two roles are not keeping me busy, I also wear a third hat of staff attorney. Another quick bit of information for me: graduated from the University of Iowa 2017 and Drake Law School in 2020. So I'm relatively new to tax policy, so please be nice to me in your questions. All righty. So this is the part of the presentation where I tell you that everything that I say in this presentation is meant as a general educational tool and is not an official legal position of the department. And we can change our minds on anything that I have listed in this presentation. So please don't rely on it as legal advice. All right, here is the list of bills that we are going to cover today. There were other tax-related bills, of course, that were passed in 2021, but these are the ones that I thought were most important to mention today. The first three are actually the department bills that passed this session. And of course, the list afterwards touch on various tax changes. Senate File 619, which if you keep track of tax news, this is not the first time you've heard Senate File 619 is last on the list, but certainly not least, and we'll spend a large portion of our time going over those tax changes. Oops. Sorry, I'm giving myself amnesia too. First on the list is the department's Modernization Bill, and you're going to hear me mention the term modernization a lot in the next hour. So just a quick background. The department has invested a lot of time and a lot of money in modernizing our computer systems. We are doing that in an effort to better interact with taxpayers and have better ease of administration of taxes. And in preparing for the first rollout of our modernization system, we found a couple of changes that we needed to address. So this bill includes a lot of those changes. First and foremost, we changed the way penalty and waivers will be calculated and addressed. This bill specifically hits on the calculation of two different penalties, which is the failure to file a tax return. So previously, the department charged 10% penalty on the total tax due if you did not file a return. We are changing that to 5%, not of the total tax, but actually just of the unpaid tax, which we thought was more fair, because if you have paid your tax, you should not get penalized on it. So changing the way we calculate penalties for failure to file tax returns. The next penalty this bill addressed was the failure to timely pay tax. That was always 5%, but now instead of being assessed 5% on the total tax liability due, that 5% will be assessed on the unpaid tax due. These penalties generally apply to all different tax types, and this should not have the net effect of increasing anyone's penalty, because previously we would charge either the failure to file a tax return or failure to timely pay a tax. So it would never exceed 10%. Now we can charge both penalties, but since both penalties are going to be assessed at 5%, your penalty should not exceed 10% for those two combined. The next change is that the penalty for failure to use a required tax form, which is a penalty that the department can charge, will now include a penalty for failure to use the required manner to remit your taxes. And in light of modernization, you'll probably see where we're going with this. The department intends to update some of the way we require taxes to be due. And in the coming rollouts, there will be more rules and news related to that, but there will now be a new penalty if taxpayers don't submit their taxes to us in the required form. Next change in Senate File 608 is mandatory composite return filing for pass-through entities and partnerships on behalf of non-resident owners. So this division of this bill simplifies that the composite return calculation for those pass-through and partnership entities should be a lot simpler now, because we are requiring that composite returns be submitted for all non-resident owners of pass-through entities and partnerships. Previously, those owners could make a withholding election and file their own income returns. That will not be a possibility anymore. We are requiring pass-through entities to pay tax on the non-resident Iowa-sourced income. That composite return will be due at the same time as their annual return, so it should not increase the number of filings you're doing. And that tax that we are assessing on non-resident owners is going to be at the top applicable tax rate, and that will be calculated at the entity level. The onus is then going to be on the non-resident owner to file a tax return. And this tax, essentially we're calling it a tax credit, will be refundable. So it is not an increase of tax due. It just shifts the burden as to who is responsible for filing the return. Importantly, this composite return requirement does not apply to publicly traded partnerships or exempt owners, and there's some different examples in the bill of what that looks like. All right, on to the next department bill, House File 418. Did chiefly one thing. It eliminated the multi-residential property classification. Multi-residential as a property classification was actually created back in 2013 as a part of a larger property tax reform bill. And the goal of the multi-residential classification was to reclassify properties that were previously classed as commercial properties. And I listed the examples down there. So this includes mobile home parks, manufactured home communities, that would include land lease communities, assisted living facilities, and apartment buildings. So the intent of the 2013 legislation, as the department understands it, is to completely have those properties be taxed as residential properties and not as commercial properties. But because that would reduce taxes to local governments, that needed to be done in a phased out approach. So this bill eliminates the classification of multi-residential starting in 2022 and provides that the properties will now be assessed at the applicable residential rate. But truth be told, that foundation was really laid in the 2013 legislation, which the rollback schedule for the multi-residential properties is listed here, reduced at 3.75% a year until they're taxed the same as residential. One quick note I want to slide in here just because I received a lot of questions about it. This does not change the fact that properties are still qualified for dual classification, just eliminates the multi-residential classification. All right, next onto the department's cleanup bill, which was Senate File 366. So this bill covered a lot of different areas, but did not do anything super remarkable. So I'm just going to touch on the different cleanup changes briefly. So Division 1 renames the corporate tax credit allowed under Iowa Code 15331, which is a credit that IEDA administers, changes that name to third-party developer tax credit. And that was necessary because there was a change made to allow individuals in relation to pass-through entities that they owned to claim this credit for that business. Previously, only corporations were allowed to claim the credit under the corporate tax credit scheme. Now that individuals can claim it in relation to their ownership of a qualified pass-through entity, we thought it would be best to change the name. Division 2 makes some clarifications to the geothermal heat pump installation tax credit. That is a mouthful. This is mostly just bringing in line current practice that the department already observes, bringing that practice in line with code. So it requires two different things. It requires that an applicant must submit an application for each installation of the heat pumps. And secondly, requires that the applicant submit their application to the department by May 1st following the year of installation, and that is a completed installation, excuse me. Division 3 is short in terms of words in Division 3, but larger in terms of impact. So Division 3 lowers the threshold of what is considered a major addition of solar credit or solar energy generation facilities. So in simple terms, think solar panels that are established in a commercial way to generate energy to sell to consumers. So the most important thing that Division 3 did was lower the cost of a solar project of what is considered a major addition from $10 million to $1 million. And the practical effect of this change is to just allow local governments access to replacement tax sooner than they would have gotten it before. So Currently, local governments only get access to replacement tax dollars generated from a solar facility if the cost of a total solar facility exceeds $10 million. So this change isn't changing the amount of tax due at all. It's just changing the allocation of tax dollars to allow local governments to get access to that money sooner. Division 4 is cleanup items mostly related to a fee for new registration. And you might be wondering, why am I talking about that? Because this is the Department of Revenue. Well, in 2008, Iowa went from a use tax on vehicles to a one-time registration fee. And that fee is 5% of the total sales price. Because it was historically a use tax, the department still administers parts of that fee with DOT. And Division 4 is the opposite of Division 3 in that it is super long, but will not have any substantial changes because we're mostly just clarifying current practice. Division 5 allows taxpayers to reduce their imputed Iowa liability for purposes of determining penalties by properly claimed credits. So kind of like I mentioned before with the penalties on the first slide, when we calculate those penalties, we use, or other penalties, we use your imputed Iowa liability, which is just your taxable income times your tax rate. And previously, we did not allow that imputed Iowa liability to be reduced by your properly claimed tax credits. And going forward, you will now be able to reduce your imputed Iowa income or Iowa liability by your properly claimed tax credits and hopefully therefore also reduce the penalty that you owe. Excuse me. All right, Division 6, and I just want to make a note, there are divisions that are out of order in some of these bills, but that's just because a lot of the divisions might not be relevant or cleanup items that are unrelated to tax and maybe more related to departments like collections abilities, say. So moving on, Division 6, partnership and pass-through audit adjustment changes. So based on the partnership and pass-through audit adjustment regime, excuse me, that was passed in 2020 as House File 2641. There was some cleanup items that were lingering from that audit regime change. Most importantly, the bill in 2020 from 2641, excuse me, House File 2641 required that if a pass-through entity was going to agree to the audit regime changes or reductions that resulted from an audit, every single owner of that pass-through entity had to agree to the changes. Now, we only require the majority of ownership interests to agree to those changes because, as you could imagine, if you have a partnership with 600 owners, it would be almost impossible to get everybody to answer, let alone agree to a change. So this just changes to have the majority of ownership interests agree to make those changes effective. Division 10 is some sales and use tax cleanup. It just removes, actually I should say replaces, excuse me, references to goods, wares, and merchandise with the term tangible personal property. And lastly, this division clarifies that renting is considered a sale and is thus subject to sales tax on the sales price of renting that item. So let's say you want to rent a cotton candy machine. The rental of the cotton candy machine is technically considered a sale, and there is sales tax due on that rental. And that is a change that was necessitated by our participation in streamlined sales and use tax agreement. Division 11 gives the department an extra month to publish the annual interest rates for the coming year. Previously, we were required to publish our interest rates in October for the upcoming year that were applicable to the upcoming year. Problem with that was we calculate the interest rates in October and it doesn't always leave us enough time to get it published. So We just moved the required publishing month, I should say, to November, and gives the department more time. Yeah, the outcome of that was giving the department more time to publish that interest rate. I will say we still plan on publishing it when it's done, and we do publish it on our website as well as in the Iowa Administrative Bulletin. Division 14 expands the list of individuals who are authorized to file a power of attorney with the department. And these changes only applied to government entities and to estates. So if you work with or represent either one of those things, it would be a good idea to go back and look at those changes. Division 15 relates to high quality jobs, sales and use tax refunds. So if you are participating in a high quality jobs project, you are entitled to sales and use tax refunds on some of the qualifying expenses. Problem with the way that was administered was there was a requirement for the project manager essentially to notify the department 2 weeks after the project was completed that the project was in fact done. This was an unnecessary requirement that could make someone ineligible if they did not respect that 2-week filing requirement. So we just eliminated it. And now when one of those projects is done, you just have to notify the department. There's no limitation on that. One quick note I want to make about this bill, the different divisions have a few different effective dates. So if you have questions about when any of these changes are effective, please consult the bill. All right, on to House File 865, which relates to the business property tax credit. This bill simply did one thing, which eliminated the requirement of a property owner to refile for a business property tax credit if a portion of the property that they owned was sold, transferred, or otherwise had some ownership changes. So previously, if you had the business property tax credit, or I should say if you were eligible for the business property tax credit, and you sold a portion of the land that was eligible for that credit, you would lose the credit on the portion you still held. This bill eliminates that requirement, so you don't have to refile if part of the land that you previously held changes ownership. Next, moving on to House File 367, which relates to the taxation of burial trust funds. If you were like me and you did not know what a burial trust fund is, I put in some background information. A burial trust is established by a person with a financial institution to fund the purchase of funeral-related services and merchandise upon the death of that taxpayer. Iowa Code Chapter 523A governs burial trusts. This bill specifically provides an exemption from state individual income tax from the interest and earnings that are generated from that burial trust fund. Next, we have House File 588, which is the Hoover Presidential Library Tax Credit. The bill actually created a whole new tax credit for donations made to the Hoover Presidential Library Foundation specifically for a project that they are working on, which is renovation of a library and museum. To qualify for this credit, you have to donate to the Hoover Presidential Library and Museum Renovation Project Fund to be eligible. IEDA is responsible for administering and awarding the certificates related to this credit. And then after IEDA awards the certificates, then you will attach those with your tax returns that we will then grant. Specifics of this credit: it is allowable against individual, corporate, franchise, insurance premium, and monies and credits tax. The aggregate amount of the credit authorized, which is essentially the cap on the credit, is $5 million, starting for donations made after July 1 of this year and goes until December 31st of 2023. The credit is equal to 25% of your donation, and the donation that you give, if you claim the Hoover tax credit is not deductible for Iowa income tax purposes. On to House File 847, which was a larger education bill. Specifically, we are looking at Division 2 of this bill, which touches on two different tax issues related to education. The first is that it increased the tuition and textbook tax credit, another mouthful, to 25% of the first $2,000 for qualifying tuition and textbooks of each dependent. Previously, the cap for the credit was $1,000, so 25% of the first $1,000. And this credit, I also want to mention, was extended to students educated through private instruction, and private instruction in this sense essentially means homeschooling expenses. And the department is currently working on rules for the tuition and textbook credit. So if you have more questions about that or want some further clarification, make sure to look for our Gov delivery announcement announcing the rules related to that program. Next change was an increase in the deduction allowed for expenses of elementary and secondary school teachers. So the second part of this bill essentially just increased the expenditures that teachers could claim on their Iowa income tax returns from $250 to $500. All right, starting in on the Big Daddy tax bill, Senate File 619. So first and foremost, this bill strikes the triggers that were established in 2018 Iowa Acts Senate File 2417, and the triggers that were placed in there were revenue related. So the state had to meet a certain amount of revenue and growth before these income tax changes could be applicable. This bill, Senate File 619, strikes those trigger requirements so that these brackets will automatically take effect January 1 of 2023. The two most important changes that came out of this automatic effective date was reducing the number of individual income tax brackets from 9 to 4. And it also modified the taxable income amounts and different tax rates for those brackets. And I've included a table down here where you can see the income tax brackets that will be effective after January 1, 2023. And I will also note that these brackets will be indexed for inflation in each subsequent year, tax year. Next, Senate File 619 made some adjustments to the way you calculate income for both individual and corporate and franchise tax filers. So for individuals, beginning January 1, 2023, the starting point for calculating your Iowa income will change from your federal adjusted gross income to federal taxable income. And this is going to essentially allow for more federal deductions and adjustments before you start your Iowa income tax. An example of one of those is net operating loss. For corporate and franchise income taxpayers starting January 1st, 2023, the state net operating loss calculation will be repealed. And as a result, taxpayers will be required to add back their federal NOL deduction that was carried over from a taxable year starting with January 1, 2023. And then also, because the state calculation is going away, taxpayers are allowed to deduct any remaining Iowa NOLs from previous tax years. Next, moving on to the different divisions, that was just Division 1. Division 2 of Senate File 619 increased the ceiling of income eligibility for the Child Dependent and Development Tax Credit from $45,000 to $90,000. Division 3 provided a corporate and individual income tax exclusion for qualifying COVID-19 grants that were issued by Iowa Economic Development Authority, Iowa Finance Authority, or Iowa Department of Agriculture and Land Stewardship. Previously, only Iowa Small Business Relief Grants were exempt from income tax, and Division 3 of Senate File 619 took care of the rest of the grants that were issued by those agencies. Division 4 was a clarification related to PPP money. Division 4 allows deductions for business expenses paid using federal PPP money for fiscal year filers. Previously, that deduction was allowed for calendar year filers, but as a result of a drafting mistake in 2020, we left off fiscal year filers. That has been rectified in 619. So fiscal year filers can claim business expense deductions for expenses paid using that PPP money. Division 5 of Senate File 619 phased out the state's inheritance tax, and it does so over the course of 4 years, reducing the amount of inheritance tax you owe by 20% every year until 2025, when the inheritance tax will be completely repealed. I had something I was going to say and I lost it. Oh, yes. So it will also repeal Iowa Code Chapters 450 and 450B effective January 1st, 2035. Senate File 619 had a few different divisions that touched on IEDA. And I've mentioned IEDA a lot already. The department, like I said, works with IEDA administering some of our tax credits, and we work very closely with them. And they help us administer all of the certificates that are required to claim these credits. Importantly, and related to taxation, Division 9 lowers the cap for some of the tax credits that IEDA is authorized to give, the first being high quality jobs program. So Division 9 lowered the cap from approximately $107 million to $70 million a year. And I say approximately $107 million because that was, I believe, the average over the last 5 years, because the cap for that program actually changes on a yearly basis. I believe last year it was 105, but that cap has now been lowered to 70. And it also lowered the cap for renewable chemical production tax credit program from $10 million to $5 million. Next, Division 13 increases workforce housing tax credit cap from $25 million a year, where it is currently, to $40 million. That is only for tax year 2021. Every year after tax year 2021, the cap will be increased to $35 million a year. And there is a small city reserve in there as well. So for tax year 2021, the small city reserve increases from $10 million to $12 million. And then every year after, when the cap is $35 million, small city reserves will be entitled to $17.5 million of that cap. Division 14 increases brownfield redevelopment program tax credit cap. The names of these programs are very long, so I'm sorry for continuing to get tripped up on them. It's a lot of words for a title. The Brownfield Redevelopment Program tax cap from $10 million to $15 million. And for those of you who don't know what a brownfield is, it is a commercial or industrial property that has been contaminated, either a former gas station or some other business that dealt with hazardous chemicals that now needs to be cleaned up, and it has sat abandoned and unused. So that brownfield program is meant to repurpose and clean up those properties to make them productive. Division 17 conforms Iowa with federal bonus depreciation provisions for equipment or other capital assets that were placed in service on or after January 1st of 2021. Notably here, federal bonus depreciation is currently at 100% of the asset cost that is scheduled to phase down and then eventually be eliminated in 2027. Division 18 decouples Iowa from the federal law that limits the amount of interest companies can claim as business expenses. Division 19 expanded the beginning farmer tax credit program, and it did so by increasing the amount of money the beginning farmer was eligible to, and it also expanded the program from, I believe, 10 to 15 years, as long as they qualified. Division 20 is the start 5-year phase out, start of the 5-year phase out on the tax of promotional play receipts. And for those of you who don't gamble a whole lot, like I did not, and did not understand what promotional play was, promotional play is essentially credit that a casino or some similarly licensed entity issues to a customer without exchange of value. So let's say the casino was running some sort of promotion where you pay $80 and then the casino gives you $100 worth of credit. The casino is currently taxed on all $100, even though they did not receive the $20, the extra $20 from the consumer. Division 20 eliminates this issue by phasing out the tax that is due on promotional play receipts, so that there will no longer be a tax on promotional play, which is, once again, just free credit essentially from licensed gambling entities. Division 22 provides a sales tax exemption for food banks on tangible personal property and taxable services. I will say there is a requirement that the TPP and taxable services that the food bank buys be used in the operation of that food bank, as long as it is a charitable purpose. Division 24 reestablishes the individual income tax checkoffs. For those of you who don't know what an individual income tax checkoff is, there's a little box on your individual income tax return where you can designate that either part of your refund will go to, for example, the Iowa State Fair Foundation Fund, or you can increase your taxable liability to owe the department more money, and they will then give it to these numerous funds listed. Traditionally, there has been 4 on the tax forms, who are individual income tax returns, is what I should say. And by law, when there is 4 different checkoffs, every 2 years, the 2 credits who have received the least amount of money automatically drop off the return. Division 24 reinstates the Iowa State Fair Foundation Fund and the Veterans Trust Fund and Volunteer Firefighter Preparedness Fund. And those were the 2 credits that were set to drop off because they received the least amount of donations in the last 2 years. Division 25 importantly shifts mental health funding from counties to states. This matters for tax purposes because they do this by eliminating a county property tax levy that counties are currently authorized to charge their property owners to fund mental health and disability services. This division eliminates that levy over the course of 2 years, and it also provides a general fund appropriation to fund the mental health and disability services. Division 26 eliminates the backfill to local governments that was created in 2013, that larger property tax reform bill that I touched on earlier. In an effort to equalize local government so they did not miss out on the revenue that they would stand to lose from classifying commercial properties as residential. This backfill fund was created. That has been eliminated by Division 26. Division 28 creates a homestead adjustment, I should say, property tax credit. It's a flavor of a credit that's under the umbrella of another credit. So this homestead adjustment property tax credit is introduced to offset the increased property tax, but only applies to properties owned by people who are at least 70 years old and whose annual household income is not more than 250% of the federal poverty level. And this homestead adjustment property tax credit is under the larger umbrella of the elderly and disabled homestead property tax credit. That is the end of Senate File 619. Last bill I want to touch on quick, but was not mentioned in that slide of all the bills that I was going to go over because I ran out of room, is House File 862, and this is just an appropriations bill, but importantly includes a one-time appropriation to the department for $4 million and change for upgrading our computer systems. As I touched on in the beginning, Senate File 608, the whole reason for Senate File 608 was to make ease of administration of our new computer system easier. This appropriation allows us some money to help pay for those upgrades. Funding goes to support this system because, like I said, it's requiring a lot of time and, of course, a lot of money. Rollout 1 of GovConnect Iowa, which this modernization system is being called, will actually go live November 15th. And that go live round includes business permit and licensing registration. So that also includes work that we're doing with Alcoholic Beverages Division, Department of Inspections and Appeals, and the Iowa Lottery Authority. It also includes income tax withholding, sales and use tax, water service excise tax, and fuel taxes. So that was something I just wanted to mention quickly, especially for our tax return preparers. Hopefully, after November 15th and the introduction of the system, this appropriation that was included in House File 862 will go to make your lives a lot easier. All right, that is the end of what I have to say about the different tax related bills for 2021. One thing I want to hit on quick is the department has a web page where you can request guidance on tax issues that you have questions about. And I included the link on this last slide so you can submit questions. But other than that, I'm happy to take any questions.
Sophie, if you could just copy that, put that into the chat for us, for everyone to get, and then obviously they'll have that on the presentation as well. It looks like we do have about 9 questions. I think it might actually be a little bit less than that. Can you see those, Clara?
Yes, I just pulled them up.
Okay.
Have any of these bills passed yet? Is the first question. Yes, all of these bills have passed and been signed by the governor. What year is the non-resident composite payment required to take effect? That's a great question. You're going to have to consult House File 608, the effective date on that. I don't believe I have it written down, but if you go to the Iowa Legislature's website and type in Senate File 608, you should be able to find the effective date for the composite return changes. Next question, what year is the just kidding, sorry. All right, when does the change to the sales tax on rentals go into effect? That is another question that you're gonna have to consult the bill for. I'm sorry, I should have put effective dates in there based on all the questions that you guys have about when these take effect. But like I said, if you pull up the Iowa Legislature's website and on the right, there's a little search box. If you type in Senate File 608, you can see the effect. Actually, no, that change, excuse me, was in Senate File 366, the change to sales tax on rentals. Next question, does the credit start in 2021? I do not know from Mary what credit you are talking about, so I cannot answer that question.
Mary,
Maybe
if
she
you're still here, could you just retype it in of what credit that you're referencing and we can answer? We'll move to the next one if that's okay.
Yeah. Next one, in what tax year do the increased tuition and teacher tax credits take effect? That information can be found in House File 847. So you're going to have to go look at Division 2 of that bill to see when those changes take effect. Next question, a number of other states have allowed pass-through entities to pay state income tax on behalf of the shareholders on entity income. This allows a deduction on the federal entity return and is allowed. I'm not sure where the question is in Jim's first one. Interesting information though, Jim. Oh wait, any chance Iowa will do this? Sorry, I should have read the next question. There's always a chance that we will do a whole host of things. It is something that our team has talked about, but whether that is a possibility in the upcoming years, I'm not going to opine on the chances of that actually happening, but we have had that discussion. Next question, when does the increase in volunteer firefighter tax credit start? Kara, yes, okay, effective date question. Hey, Kyle, I'm going to update this presentation with all of the effective dates for the different provisions I've mentioned, and then I'll send it to you because I feel like that will answer a lot of the questions that people have. Kara, I'm not exactly sure because Senate File 619 was also very large, so the different divisions had different effective dates, but as I mentioned to Kyle a minute ago, I will update this presentation for you guys so you have the effective dates of all the different divisions I mentioned. On to the next question. Senate File 366, Division 10. If renting is considered a sale and thus subject to sales tax on the sales price, does that mean the sales tax is not owed on renting real property? Short answer to that is Division 10 applies to rentals of tangible personal property and not real property. So Division 10, that sales tax that I talked about mentioned due on rentals only applies to rentals of TPP and vehicles, which is tangible personal property. All right, next question. Are there any exceptions to the new composite taxes on non-residents? Yes, there are exceptions. Publicly held partnerships and pass-throughs are not required to file composite returns. And there's a few enumerated examples. The only one that's coming to mind are for companies who are only in Iowa to provide disaster relief. You're going to have to go to Senate File 608 to see if there are any other exemptions, or I should say exceptions. But those are the two that I know off the top of my head. Next question from Meredith. Does a farm machine shed still qualify for the 100% bonus depreciation? I am not going to opine in this presentation on the specific taxability of certain items. Meredith, you are welcome to send me a question when the presentation is done. I believe Sophie was going to put my email in the chat, and I will hook you up with one of our policy directors who may choose to answer that question. Sometimes the department helps to answer some of those questions, but oftentimes on the specific taxability of specific items, we choose not to opine on whether those are taxable or not, because then we would be in the business of doing everybody's taxes essentially. But Meredith, I'm happy to try and help if you send me an email question. Next question from Mike. Are hotels considered multi-residential? No. Those are considered commercial, I believe. All I know is they are not considered multi-residential and will not be taxed as residential for the next assessment year. To drill down on the sales tax on rent, I have a client that rents building equipment from another of his businesses. Does this mean he has to pay sales tax on that rent? Technically, yes. If you have one business selling the rental of equipment to another, you should be paying sales tax on the rental, even if it is between related entities, but related entities with common ownership. As long as they are different entities, they should technically be collecting sales tax. Is the starting point for corporate income tax now moving to federal line 30? The slide mentions starting point for individuals as federal taxable income, not specific on corporations. I have no idea what federal line 30 is because I am not a tax practitioner. So I cannot answer that specific question. I know the slide does touch on the starting point for corporate income, but Elena, I think that's your name. Sorry if I'm mispronouncing that. Happy to have you send me a question and I can pass that on to our policy directors who are much more familiar with lines on tax forms. Next question from Mike, especially the hotels. Oh, I believe that is related to, yes, the classification. Yeah, extended stay where people stay multiple weeks, months at the hotel. I can tell you that was not provided for in House File 418 as an exception. Mike, if you want to expand on that question, if you have sounds like you maybe have a specific example in mind, feel free to shoot me an email and we can try to workshop what your question is. Martin, is the new penalty for not paying as required waivable? No. Next question, House File 847. Will private instruction include Amish schools? Let's go. Oh, I have a slide up right now. Whether private instruction includes Amish schools is going to depend on the definition of private instruction, which is found in Iowa Code 299A1. That is on the slide about House File 847. I am not a good person to decide or say yes or no on whether for sure that Amish school may qualify, but a good place for you to look, a good starting point would be that 299A1. Based on my research, I believe the answer is a loose yes, but you definitely need to consult the code, the relevant code section to see if you agree with that. Next question from Dan, will tuition paid to private non-accredited schools count for the tuition and tax book credit as expenses for homeschooling? Well, That's a good question. Private schools already qualified for the tuition and textbook tax credit. I am not sure about the non-accredited part of the private school. I believe based on the broad definitions of what private instruction are in 299A, the answer may be yes. But that is actually an excellent question to submit to request tax guidance on. Like I said, the department is working on administrative rules for what exactly that means, and those will be published, I believe, in the next Iowa Administrative Bulletin on the legislature's website. And those rules would be an excellent source to consult to answer that question. Another question, oh wait, from Mike. Oh, looks like we just got some maybe responses. How will we receive notification to use the GovConnect Iowa program? Is that to replace the e-file and pay system? So if you are subscribed to the department's Gov delivery system, there's been a couple emails that have gone out with information on the new modernization system. There's a whole web page that I would find for you right now, but I know I'm still sharing my screen, so I will spare you all of the tabs I have open. If you just Google Iowa Department of Revenue modernization, there should be a page that pops up that explains the modernization process and what will be included. It is not necessarily to replace the e-file and pay, but it's making e-file an option through this system rather than our current vendors. John Wolf, the credit for increased property tax for those over 70 and meet income limit is a credit against Iowa income tax or property tax. That will be, that's a good question. I don't know exactly how they structured it. Let me see if it's in here. It's a property tax credit. All right. Next question from John. Does the change to tax rentals apply only to personal property? Does it also apply to real property? The change that I mentioned in our cleanup bill only applies to rental of tangible personal property. Next question from John Selk. Did I hear correctly that homeschooling supplies qualify for the tuition and textbook credit? That's a tricky one. So supplies used in homeschooling will qualify for the credit only if they are required by a public Iowa school or a school somewhere in the state of Iowa. If they have required it as a necessary supply, then homeschoolers will be allowed to take it, is the angle the department is going for right now. That information is in our rules, so it is subject to change, I will note. Loose answer is yes. There's some specifics that need to be obeyed in terms of taking that credit and when it will be properly allowed. You can't just say, I'm going to require my homeschool student needs a really fancy laptop or really expensive software that no other school in Iowa would require. That would not be eligible under the current rule structure. Like I said, putting a big asterisk by that because those rules have not passed the Administrative Rules Review Committee yet. I think I already answered that. Will tuition paid to private? Oh yes, the accredited question. On to the next one. Federal line 30 is federal taxable income for NOLs. Once again, the order and lines of tax deduction is not my specialty, so I will leave that to our policy directors who are much more experienced in answering questions like that. Are the composite taxes due by the original due date of the returns? So I believe the answer to your question is yes. The composite returns are due on the same date as your annual entity returns are due. And that includes an automatic extension. If your entity income returns, you get an extension on those. Your composite returns will also get an extension as well. Does the sales tax on rental of property apply to rental of farm equipment? I believe there is an exemption, a sales tax exemption for a separate, I should say, sales tax exemption for farm equipment. Miranda, if you send me an email, I can find you the specific Iowa code section that talks about that exemption for farm equipment. Kathleen, are information technology services now a taxable item in Iowa? I don't know. I guess I need some more information on what you mean by information technology services to answer that question. And Kathleen, you're more than welcome to send me an email and I will help you, well, mostly help myself figure out what you mean by your question.
Well, it is now 1 o'clock your guys' time. I'm actually on Eastern time right now, so I'm trying to keep track of both times and everything. But I will just have to cut it off right now, just out of respect to everyone's time. Just as a quick reminder, this webinar was recorded. It will be posted to the Iowa SourceLink YouTube channel and ultimately on our website at the link that we sent to you earlier, where you can download the slides. So then you can use that for your future reference. Again, feel free to send an email to either our team or Clara to get more information about things that either A, weren't answered here today, or if specifically was called out for you to follow up and ask your question, then we can get you directed to the right place. I will also be posting the updated slide or presentation with all of the effective dates that these laws have gone through. That should be hopefully soon-ish, but just keep looking for that. And if you don't see it within a couple of days, send us an email and say, hey, Kyle, you're kind of a bad dude for not sharing that with us, and I'll make sure that it's posted for everybody. Just as a reminder, we will be having another webinar next month on the 3rd, November 3rd at noon as well, discussing e-services at the Iowa Department of Revenue. This would include things like filing tax returns, making payments, and where to find self-help tools, and much more. You can register this at the same place that you registered for this one, so just be looking for those if you're interested. And once again, just thank you, Clara, for helping us out today and answering some questions. Thank you for everyone for joining us today, and have a great rest of your day.